Welcome to TradeTheMBI.com. This is John. This report is for the 8th, and finally it's here. Election day has arrived. Interestingly enough, we did get the midterm buyers cross over on a daily. We've got the orange below the red, so certainly created the oversold configuration. Potentially puts in number 2 buy here off of that configuration. Not quite overbought, but getting close to it. So the potential is that this could go for just a little bit more, which, some people terrified that the prospects of after election things could get, squirrely. You're going to see probably some movement, unless it's a continuation of HRC victory, then should see continuation move to the upside. If there starts to get to be some doubt, then you might see a little fluctuation going on in there. But at the end of the day, as I've said, both of them have members of Goldman Sachs working with them, so I can't imagine that money is frightened all that much. It's just a question of where you put it. Nothing's going to change all that much. And there's the Dow, much bigger move there in relation now. Interestingly enough, if we compare where the highs are relatively speaking, you begin to get a gauge. There's the ES and its relationship to the highs, the Dow, from its highs over here. Similar situation. So what we've done is basically evened out, and all the indexes have been rebalanced and are in line, which is perfect. A little retrace on the euro as the dollar and everything gained strength on the FBI investigation. Well, who knows what's going on with it? I mean, they just said they weren't going to do anything with the emails. We don't know if that means that there are other things going on still. Doesn't really matter at this particular point. Bonds, again, I'm telling you, stay away from there. Though we can project that there are going to be some signs of inflation, and that could generate some significant changes in yield structure, and that would put more pressure on the market than anything, because the idea that the potential of rate increases and or inflation and the prospect that we may actually see a return to normal market forces would certainly drive bonds up. Oil, off the big sell-off. I mean, it's just too much supply, too much capability of adding supply. You're going to be looking at extended periods of low oil. You start to turn up the economic engine, and inflation, big time. A lot of pent-up situations that could really create some interesting dynamics, at least for the Fed, and as far as the debt situation, I mean, it could really create some very difficult budgetary issues. And gold, I don't think gold's over there. We just got overbought with that situation. I think that there may be new opportunities there, however you are in DOC spread at this particular point. So it's just a matter of looking for broader perspective on that. Why did our charts kind of got moved here? Let's get that right into the window better. There we go. And you can see. We had stayed in this number 6 buy, and that's an interesting thing for some people. They're looking at, wow, but price came down. Exactly, but still, the overall fundamentals of the readings were a little bit more on the bullish side, and sure enough, it was accurate. Now, I was telling everyone when this gapped up open yesterday, do not attempt to short this, because it's only going to rise, and then trap shorts towards the end of the day are looking for any dip, and they're just going to get sucked back in, and that's exactly what happened. So you can see that plain and clean, no doubt about it. I think even the case charts here were green all the way through, even though we had the short algo leading. And that is usually an indication when you see that kind of a negative move and it's still staying bullish. You're kind of shaking your head like, why isn't it flipping? Well, exactly. That's why it isn't flipping. And it can keep you. Now we're fractionally minus, but after that big a move, you would expect as much as a third retrace into that move. I mean, you can see the whole thing is positive extremes starting from the beginning of it, going back. So we could probably look at a broader time frame, would give a better indication. It's still 5,000. We need a 50K tick. Here we go with a 50K tick. It was in pretty weakness. What program is this? Not the new. This is just the old D program. you had quite a range in that spread between them. And it's interesting because some of the algorithm adjustments that I've made modifies a little bit of the long-short algo. When the spreads become too great, it modifies them to make additional adjustments. So that's another key factor, and that's part of the adjustments in handling the stops, which is where we're at now in the program, where we're starting to deal with handling individual trade allocations within a general setup. So it gets a little more complicated within that, but still provides nice continuation runs. But this has been beautiful from a shakeout standpoint. Reset it, gave the next run opportunity. We'll reset again, which means you're already reset, oversold. Well, not necessarily oversold, but at least you're completely reset at this particular point in the ES, so that a new high created from here, not a big deal. We do have to retest the lows right here, 21-21 range. So you could see a little bit of pullback right into that low portion with the dip below the red line here on the extreme. But overall, pretty straightforward, not looking bad. As always, though, I will be updating with Election Day. You're going to be seeing all sorts of exit polls and stuff. Not necessarily reliable, but it's certainly going to have some impact on the market. But they're going to be looking at good old Nate Silver and that to determine their probabilities. The market's already pretty much made its bet, so they'll just have to see how it goes. But I don't think they can get it wrong in either case. The bias is still going to be to the upside. As always, though, trade well. Follow me on the Skype chat. Talk to you later.